Good morning, everyone. Welcome to our webinar. We're just going to give people a few more minutes to log in because we can still see people are logging into the webinar, and then we'll start. I can still see people logging in as we speak. I'll just give it another minute or so. Okay, let's begin, and if anybody else is logging in, obviously they can catch up as we go through a couple of. First of all, we'll introduce ourselves. I'm Socrates Socratous. I'm the VAT partner here at Buzzacott, and sat beside me is. I'll let you introduce yourself, Kam.
Thanks, Soc. I'm Kam Chauhan, VAT Director at Buzzacott. Been here for a few years now. So,
yeah.
Soc, make a start now.
Okay, let's just move on. Can we have the next slide? So, in terms of the agenda today, what I'll do is just outline how the online process will work. But moving on to the more interesting stuff, we'll give an overview of the new VAT rules coming in and touch on the legislation that's going to affect VAT and private school sector. We'll go through some of the basics of VAT. We'll then look at VAT recovery on costs, and then we'll round up by touching on some areas of difficulty and opportunities. So in terms of housekeeping, moving on to the next slide, how to ask questions. At the moment, you're all muted, so you can only listen to me and Kam, unfortunately. We'll try and keep it interesting. But the idea is that we'll run through the presentation, and then at the end of the presentation, we'll have a Q&A session. You should also be able to access the online Q&A, whereby, as we're both presenting, you should be able to post questions on your Teams connection. And what we can do is we can pick those up towards the end, hopefully. But once the presentation is formally finished, the idea will be that I should mention the presentation will be recorded. Once the presentation is finished, the recording will stop and the Q&A session will be effectively offline, because we appreciate that some people may not necessarily want to have their questions broadcast. So once the Q&A starts, it will be just between us on this webinar, and that element won't be recorded. Okay, let's move on to the next slide if we can. Okay, so let's start off with the overview of the new rules and what the VAT legislation actually says. I don't want to make this overly complicated, but I think it's important that we understand and touch base on who this affects and what the law actually says. Next slide, please. So in terms of who this is going to affect, well, it's going to affect private schools, and we'll look at what the definition of that is in a moment. Independent schools and further education sixth form colleges that provide full-time education for pupils of a compulsory age. Similarly, it will impact on institutions who may be providing education for 16 to 19-year-olds, but Revenue have introduced a term there. They've said those are wholly or mainly concerned with the education of the age group, and we'll look at what that actually means in practice. Unfortunately, it's also going to capture non-maintained special needs schools, but again, we need to look at how those organisations are funded. So those types of schools that receive block grants, as far as Revenue are concerned, those block grants will be treated as outside the scope of VAT. Whereas if they're getting funding that's based on a per pupil basis, they will see that as a standard rated supply. VAT is going to have to be charged in respect of all fees that relate to terms starting after the 1st of January. So if any of you are already VAT registered, or if you're receiving fees in relation to services before the 1st of Jan, those will not be liable to VAT. Those that are not VAT registered will need to think about when they need to register, and we'll touch base on what that means in a moment. But before you can charge VAT, one of the fundamental principles is that you have to be VAT registered, and you have to start filing VAT returns. And it's at that point that you charge VAT and start filing VAT returns. Once you're VAT registered, one point that you shouldn't forget is that once you've got a registration, it's not just your school fees that are liable to VAT. If you have any other forms of taxable income, any other supplies of goods or services that ordinarily are liable to VAT, once you're registered, you need to include those in the return. But that's something that Kam will touch base on later on. Okay, next question. Next slide, please. So in terms of the legislation itself, at the moment, Schedule 9 Group 6 of the VAT Act, so those of you that want bedtime reading, start looking at the VAT Act. The current legislation provides a provision in there that exempts the supply of education by an eligible body. And it's this term eligible body that's key to this. The way that the legislation or the changes are being drafted is such that private schools are still eligible bodies. And the reason for that is so that they can still carry on benefiting from some of those exemptions. And what you actually have is an exception to the legislation that takes private schools out of the exemption when they're providing certain services. And those certain services are the educational type services. So education provided by a private school will be standard rated. However, nursery services will still be exempt. Similarly, it's not just education that's called, it's vocational training. And importantly, the standard rating will also apply to any board and lodging that's closely related to those supplies. And we're going to look at the definition of closely related supplies later on. Changes are coming in from the 1st of January, and there are anti-forestalling measures that have also been introduced at the same time, which again, we'll look at in a moment. Next slide, please. So the first thing to identify is what is a private school. Well, it's defined as an institution which is either a school where full-time education is provided for pupils of a compulsory age, and where fees are charged for the provision of that education, and where that organisation is not a nursery. In addition to that, sorry, next slide. It also includes an institution which is wholly or mainly, we've got that term coming in again, concerned with providing education suitable to children over a compulsory age but under 19. So that's where your 16 to 19-year-olds come in. It captures institutions that are providing full-time education, and similarly, full-time education that is wholly or mainly in respect of education where fees are charged. The legislation doesn't capture independent training or learning providers. Those kinds of institutions can continue to exempt their supplies. And similarly, there's provision there for anybody that wanted to get clever and try and set up a separate entity. There's also provision there that captures connected persons. And when you're looking at the term for connected persons, you're looking at the definition for direct tax purposes. Again, we're not going to go into the detail of that, but be aware that any clever avoidance type legislation will be captured by that provision. Next slide, please. So who is excluded from this? Well, anyone providing English as a foreign language will be very pleased to see that when the Chancellor sat up and made her announcements, she took on board some of the representations that were made, because under the original draft legislation, we had this odd situation where commercial providers of English as a foreign language could continue to exempt their supplies, but charities were actually caught. We made representation to Revenue via the Charity Tax Group, and you'll be pleased to know that providers of English as a foreign language can continue to exempt their supplies. With regard to nurseries, again, we had this odd situation where Revenue took the view, although there was an exception there for nurseries, they were initially taking the view that if you had one child over the age of 5 attending a nursery, suddenly your supplies became standard rated. Thankfully, Revenue have introduced this lovely phrase, wholly and almost wholly, and they've defined that that actually means 90% of the children. So if 90% of the children are less than 5 years old, the exemption continues to apply. Similarly, higher education that's taught at schools will be carved out and continue to be exempt. Further education colleges, again, won't be captured by this, as long as the education isn't wholly or mainly for 16 to 19-year-olds. And what Revenue have said in terms of defining wholly or mainly, they've said this is where at least 51% of the pupils are 16 to 19-year-olds, and there's a fee charged. And it's quite interesting. That term wholly or mainly has always existed in VAT legislation, and for other parts of VAT legislation, they use an 80% test. But here they've introduced a 51% test. And then the other exclusion, as I mentioned earlier, independent training providers and independent learning providers, they're also excluded. Next slide, please. So once you're caught, what do you need to think about? Well, the first thing what we need to think about is if you're not already VAT registered, when you need to register. And the date of registration is going to be dependent on a couple of factors. First of all, the value of school fee payments that you intend to receive after the 1st of January, the date that you receive those payments, and similarly, if you've raised invoices for advance payments or you've already received advance payments for services that are going to be provided after the 1st of January, if you receive those payments, you may actually have an obligation to register now. So let's look at that. Sorry, next slide, please. So there's two tests when you're thinking about VAT registration. One's called the backward test, and one's called the forward test. So the backward test is where you look at your taxable turnover over the preceding 12-month period, and if that exceeds £90,000, then you have an obligation to notify a VAT registration. And your registration date will be the first day of the second month. So if you exceeded the registration threshold on the 1st of October, you've then got 30 days to notify revenue. So you'd have until the end of October. Your registration would be from the 1st of November. You've then got the forward look, and this is where you look at your expected turnover, and by looking at your turnover or the income that you're expecting to receive, you know for a fact that within the next 30-day period, you're going to exceed £90,000. So if any schools have received fees in advance, or they know they're going to raise invoices for fees in advance for education from the 1st of January, and they know that's going to happen today, well, technically you need to notify your registration from today. You've got 30 days to notify revenue, but your date of registration will be the date that you realised that you're going to exceed the threshold. Okay, next slide, please. In terms of the practicalities, the registration can be filed online, and you do that by completing a VAT-1. Revenue have assured us that they have the resource to deal with registrations, but I wouldn't hold our breath. Revenue are renowned for being very slow with VAT registrations, and there could be delays. They've told us there's a team specifically set up for this, but as I say, watch this space. I think the main thing for you as organisations that have to register is to put the application in at the correct time.
Just one additional point on this is that in practical terms, you need a UTR to actually register. So many schools may not actually have a UTR. So just to bear that in mind, that you actually have to apply for a UTR to actually then be in a position to make an application to register. So that may add to the time frames involved.
Yeah, and also if you go onto the revenue website, I think they give you some specific guidance on how to complete the form and how to describe yourselves in terms of business activity to try and rush these registrations through. So it's certainly worth visiting Revenue's websites, where we've got a link at the end. Sorry, next slide, please. Question that may well arise later on, but just to be aware, there's anti-forestalling legislation coming. So at the moment, the anti-forestalling legislation captures fees received between the 29th and the 29th of July and the 29th of October in terms of education that's going to be provided after that date. There's a big question mark about fees received in advance before the 29th of July, i.e. before the announcement was made. Now, there's mixed views on what the situation is here, and unfortunately, I don't think we can give you general advice on this, because the VAT position is really going to be driven by the terms of your own fees in advance payments and the contracts that you've entered into. But very, very broadly, if your fees in advance and your agreements with the parents make it clear that they're paying for a specific education for a particular period, that should crystallize a tax point. Where you've just made a general payment without defining what that payment is for, that area might be open to challenge by revenue, and revenue said they're going to look at this. Practical point, you can't include VAT on your invoices until you get a VAT registration number. However, if you've raised fees in advance and you're raising invoices now, what you should be doing is increasing your price to reflect the fact that part of that income is going to be payable to revenue for supplies after the 1st of January once you're registered. Okay, next slide, please. Okay, that's all I was going to cover in terms of the legislation and the registration process. I'll pass you over to Kam now, who will outline some of the basics about VAT registration. We're conscious that some of you out there won't have a clue about how VAT operates and what it means, so we'll try and highlight some of those areas for you now.
Thanks, Soc. For the next slide, please. So, as Soc just mentioned, I thought it'd be useful to cover some of the basics of VAT, because for many of you, it'll be the first time you're actually working with VAT and looking at VAT. So it's quite useful to understand conceptually what VAT was designed to do and how it works, and that will hopefully help in terms of how you administer VAT. So, as many people will know, VAT is now 50 years old. It was intended to be a simple tax, or one of the simpler taxes that we have, but I can safely say that it's now one of the most complicated taxes to navigate, and I think by far has the most case law, or the most litigation in terms of challenges to HMRC and how people apply VAT legislation differently. So as a basic concept, the idea is that if you charge VAT on your income, then any VAT that you've incurred on the cost to generate that income should be reclaimable. Now that works perfectly fine if you have a very kind of simple business that only has one type of income. It's very straightforward in that if you charge VAT on that income, all of the costs that you have incurred, you can reclaim them all back. So obviously most businesses and schools in particular will have a more complicated VAT arrangement, and will have income that won't all be subject to VAT. So that's where the complications come in. As Soc already mentioned, if you have taxable income or income that will be subject to any positive rate of VAT, so that includes zero rated income, reduced rate income, and standard rated VAT income, then you have to register for VAT. The current VAT registration threshold is obviously £90,000. And then in order to charge VAT, you obviously have to become registered. The next slide, please. So I've said it's very simple, and why is it so difficult? So the main difficulties come from how to decide what's subject to VAT, what's subject to exemption, and to navigate the VAT legislation, and also to navigate HMRC's guidance. As I think probably most of you are already aware, it's not as easy as it looks. HMRC have their own views on things which might not necessarily be the right view, and sometimes it can be difficult to navigate the actual legislation to see what it's actually saying. The only other area of that legislation which has an exception to an eligible rate is the VAT on foodstuffs, which operate in a very similar way. And if anyone follows the press in terms of that kind of area of VAT, there are cases nearly every month on the VAT of foodstuffs. So it's not looking good for how this will pan out in the future. There's going to be a lot of litigation probably. And the main reason, or the second reason why it's so difficult, is because inherently it's a self-assessing tax. So it's up to individual businesses to apply the VAT and to navigate the rules. So the only issue with that is obviously HMRC will still penalise you if you get it wrong, and if they consider that you've made the error, as a result of not taking reasonable care in analysing the VAT legislation and HMRC guidance. There is a big issue in that, because how do you define who takes reasonable care and how it is reasonable? It is very subjective, and obviously HMRC may have a different view of that compared to what we business might think is reasonable. Lastly, another common problem is that even if you were unsure of something and you wanted to ask HMRC how to apply it, they may not actually tell you. So unless you ask for a non-statutory ruling, you will often get a response that just tells you to read their notices or to look at the legislation, which is not very helpful when you're genuinely trying to decide whether something is on the borders of qualifying for exemption or not. Next slide, please. So just carrying on in terms of the basic requirements for VAT, you would obviously need to register to be in a position to charge VAT and also to reclaim the VAT you incur on your costs. Businesses that make both taxable and exempt supplies, so most schools will be in that position. They will only be able to recover the VAT that is attributable to taxable activities, i.e. the activities that where you're charging VAT. So I'll come on to sort of some more detail on this in a little while, but just to explain that, so as you have that concept of trying to split out your costs into activities, you need to be able to, as a business, split out your costs and apportion them to different areas of income. So where you have taxable and exempt supplies, you have to try and apportion your overhead costs that relate to both activities. So this is what is partial exemption, and I'll cover a bit more sort of detail on that in a little while. Also important to remember that just because the VAT on your school fees has become subject to VAT, there are also other services that you might provide that would be VATable. So, for example, if you hired out sports facilities on a basis that wasn't for block bookings, then that would be taxable income. If you were to sell goods and perhaps have a coffee shop or something like that, then that is also taxable income that would be subject to VAT. The next and sort of most important thing administratively is that registering for VAT now, you have to meet the Making Tax Digital rules for VAT, which impose a number of sort of conditions in terms of digital record keeping and filing your VAT returns digitally. The problem with that is that many schools will obviously be operating accounting systems that were designed before Making Tax Digital became in play for most sort of VAT returns. So unless you're using some of the more common Sage and Xero packages, then it's likely that you wouldn't meet the Making Tax Digital's requirements for example, if you had bespoke school accounting software. So the other thing is that VAT invoices obviously have requirements. You may not need to issue VAT invoices to parents, but if you are having other VATable services, you will need to know what the requirements to issue a valid VAT invoice are.
Yeah, just on that point, you've only got an obligation to raise a tax invoice if you're supplying services to another taxable person. So if most of your services are to parents, unlikely you're going to have to issue what's called a tax invoice. But nevertheless, you've still got an obligation to account for that. Sorry.
Yeah, no, and obviously it's still important to know how to issue a VAT invoice if somebody asks for one.
Yeah.
The last point on there is just an awareness point, because this is what catches out a lot of businesses in general, not just schools, but important to acknowledge or realise the requirement to account for VAT on reverse charge costs. So the reverse charge is, as a concept, designed to introduce VAT, a self-imposed VAT charge on costs that would have been subject to VAT had they been incurred by a UK supplier. So the biggest issues we've seen with reverse charges are with the likes of Facebook, Google, LinkedIn, who tend to charge from a European subsidiary in Ireland, Luxembourg. And then what happens is, because they are considered to be targeted advertising, they don't qualify for charity advertising relief, and as a result you have to account for the reverse charge, self account for the reverse charge on those costs. But if they are overhead costs, you can't reclaim the VAT in full, so you're effectively introducing a self-imposed VAT cost in your VAT returns. Now, that can catch out a lot of businesses in general because they are either not aware of the requirements or don't apply them correctly, in which results in obviously assessments when HMRC come to review the position. Next slide, please. So, focus on making tax digital. Obviously, it is key to have that set up before you become VAT registered, and just be aware of your VAT accounting. You are in a bit of a good position because you're free to set it up in a way how you want it. So I'll come on to why it's important in a little while, but the key thing is trying to make sure the inputting of the information into your accounting system is correct and done in the most efficient way, because it will pay dividends in the future. And when I discuss partial exemption in a minute, you'll see why. So it is always worth investing in the training to provide the accounts payable staff with the correct reasons why they need to pay VAT sort of more attention, and to ensure that they post the information in a way that helps you to do your VAT returns.
Yeah, the posting of VAT returns is actually key to undertaking partial exemption calculations. So that's a very important point.
Yeah. Good timing for the next slide, I think. So this is just a kind of illustrative example of how a VAT return would work, and trying to link some of the things we've already talked about. So if you were to have a VATable service in this example, you would have incurred £1,000 plus VAT on your costs, and this just shows you how that effectively, that one transaction coming in and one transaction going out, how it would work out in terms of your VAT return. So in this particular example, going back to what we said in terms of basics, you've only got income that is subject to VAT. So as your income is fully taxable, any cost that you incur in generating that income is fully recoverable. Therefore, you have an output VAT amount of £600 to account to for HMRC, input VAT of £200 to claim from HMRC. So your net position is the £400 that you're paying to HMRC, but obviously you would have been paid that from your customer anyway. If we move on to the next slide, this just demonstrates how the VAT return process would work out if your £3,000 income was zero rated rather than subject to VAT. So the only difference is you get a repayment rather than having to account for any VAT in your VAT return.
Yeah, as your supply is zero rated, the output tax is zero effectively. So in this situation, you're in a net repayment situation from revenue. Yeah.
Next slide, please. So the last example is just to show you the effect of if it was exempt. The input VAT should actually be probably nil in terms of what you can claim from your VAT return, but you have input VAT of £200, which is effectively your irrecoverable VAT. So if you had only exempt income, you wouldn't, subject to being de minimis, which most schools are not unlikely to be de minimis, but you would have input VAT to record in your system of £200, but it would be all irrecoverable, so it'd be written off. So your net amount to HMRC would be nil because you'd have no output VAT and no input VAT to claim. Next slide, please. So that covered off the basics, and that this is a slightly more complicated area in terms of how to decide how much VAT you can recover. Next slide, please. So partial exemptions, you have to split every cost that comes in into different categories. To cost that directly relates to business activities, costs that directly relate to exempt business activities, and then everything else that was an overhead cost or doesn't relate to a specific activity would be recovered or apportioned based on a recovery method. So the standard method of partial exemption is based on turnover and doesn't need to be agreed with HMRC. So this is the default position that doesn't need any special agreement from HMRC, and it's based on your taxable turnover. I put income on the slide, but it means turnover. So your taxable turnover over your taxable and exempt turnover. And then you multiply that apportionment by 100, and then you can round up to the next whole percentage. So if 50% of your income was subject to VAT and 50% was exempt, then you obviously have a 50% recovery rate. But going back to what we said earlier in terms of the basics, if your accounting or your VAT accounting doesn't pick up which costs are related to which activities, then it means that everything will just go into the residual overhead pot, which may not be what you need. You have to try and think of ways, either by using different VAT codes or different department codes, to match up your costs to your income where possible. The other thing to mention is that it is possible to have a different method of partial exemption, which I'll come on to in a minute. The last thing to mention is that HMRC have said that they don't consider that there will be many non-business activities for schools as a result of having bursaries. But if for any reason your school was involved in any other non-business activities outside of bursaries, then potentially you may have to do a non-business apportionment before you carry out partial exemption. But for now, we've assumed that most schools won't be required to do any non-business calculation.
Yeah, can I just pause on that? I mean, this slide's actually a very important one, because the whole concept of partial exemption requires you to have accurate records. So if we look at it from a practical perspective, if you're sat there, you're VAT registered, you're now receiving purchase invoices that are incurring VAT, where there's VAT shown, you've got to make a decision as to whether or not you can recover that VAT. Which of those three categories is that purchase invoice going to be posted to? So you need to have a system in place that says these VAT costs directly relate to taxable activities, we can recover the VAT. These VAT costs relate to exempt activities, we can't recover the VAT. And then you're going to have a pool of overhead costs that don't relate to a particular activity, and they're the overhead costs that are going to be subject to your partial exemption calculation. So your record keeping and VAT accounting records are going to be very important. And unless your purchase clerk has got VAT knowledge, they're going to find it difficult. So again, they're areas that we can help you with, particularly with attaching what we call VAT tags to cost centres or department codes to try and simplify the process.
Yeah.
Sorry, Kam.
That's fine. I've just seen a question from Lauren as well. So that is the case for your overhead costs. So your overhead costs are subject to apportionment, but if you have direct costs that don't require sort of overhead recovery rate calculations, then they can be claimed on the basis of the direct costs and what income it relates to. So if, for example, you had bought a laptop that only related to the provision of education that was going to be VATable, then that is a direct cost that can be reclaimed in full even though you may have a recovery rate for your overhead costs, which is different. If I can go into the next slide, please. So, as I mentioned earlier, the standard method does not need to be agreed with HMRC. It's the default method. So, but it is possible to agree alternative methods which need separate written agreement from HMRC. Some of these methods can utilize different measurements other than turnover, which are based on staff time, sectorized methods. Sectorized methods are very useful if you had an organization that, for example, was running more than one school, or where you have a school that is run alongside a different type of activity. So,
or more than one building.
More than one building as well. So, for example, if you had somebody that was running or an entity that owned a school but also owned a care home or also owned sports facilities separately, then it's the entity that becomes VAT registered. So it covers all of the activities of that entity. If you had a VAT recovery rate based on the total turnover from every activity, maybe it may not be reflective of the use of those costs, whereby obviously different types of businesses or different areas may incur more costs than others. In that type of scenario, you would try and agree a special method with HMRC, which would be based on a different basis, or which could be split out into different buildings or different schools, so that each one would have a different basis of VAT recovery or different allocation of costs. The problem with that is that it is at the moment very difficult to agree any type of method that varies from the standard method with HMRC, and that's not just for us, it's for every advisor out there. HMRC insist on businesses trying to demonstrate why a method is more accurate than the use of the standard method, but the problem is that no one can really tell how something's going to be in the future, and also how do you define what's more accurate. We can demonstrate why things are not reflective or not can be disproportionate and may not reflect a fair use of input VAT, but we can never demonstrate how something is more accurate because it is very subjective. So it's just to bear in mind that although you can have a different method, and it can sort of help a lot in terms of VAT recovery, have those different activities, it's just that it will be quite painful to read. Okay, next slide, please. So just a summary, when you do your Making Tax Digital calculations, your partial exemption calculations don't have to be part of your MTD accounting. So your partial exemption calculations can be done outside of Making Tax Digital, and then what happens is you would post the irrecoverable VAT as a journal or as an adjustment when you file your VAT return. So there is no requirement to keep the calculations within your MTD software or to report them in any way. You just have to have the calculations saved separately. The next thing is that you have, as a legal requirement, you have to carry out an annual adjustment. So just to explain how partial exemption works, in general, you have provisional calculations each quarter, but they are subject to an annual calculation. The reason for the annual calculation is to iron out any fluctuations in where you may have income in different periods or it costs in different times of the year. So most schools will probably look to change their partial exemption years to match their accounting years. Just to bear in mind that you can do that as well. I'm conscious of time, so just going to press on. So capital goods scheme, so we'll talk about later.
Yeah, moving to that. Yeah, and as obviously the keys planning and VAT accounting, so that's fine. Okay, can we move on to the next slide, please? So that was a very generic, quick run through of both the legislation and the requirements of partial exemption. There are areas of difficulty here which I want to try and cover off quickly, to give you sufficient time to ask some questions. So if we can move on to the next slide, please. In terms of VAT recovery issues, one of the questions, or some of the questions that are being asked, are about pre-registration input tax. So VAT that you've incurred before you've registered. That's really down to the apportionment in interaction with partial exemption. Capital goods, there's been a lot of publicity in the press about schools being able to reclaim VAT on capital projects that they carried out before they were VAT registered. These can go back 10 years, and we'll have a look at that in a moment. It covers all buildings that have been refurbished and have been capitalised in the accounts. And then something called the standard method override, which I'm going to be very, very brief on because that is a very technical point. So can we move on to the next slide, please? So in terms of pre-registration input tax, what can you claim back? Well, if you've incurred VAT on goods and those goods are still on hand at the time of registration, you can go back 4 years before your date of registration to think about VAT recovery. Now, in terms of pre-registration input tax, it's at HMRC's discretion. But what they have said in this particular instance is that they'll allow a 5-year adjustment period. So how we think that's going to work, because Revenue haven't given us any specific guidance on this. Let's say you bought some computer equipment 2 years ago and you incurred VAT on that. You're now able to reclaim some of that VAT because you had 2 years worth of exempt use, and under their 5-year adjustment period, you've now got 3 years of taxable use. So arguably, you can go back and reclaim 3/5 of that VAT. That's how we think it's going to work. But Revenue haven't given any examples in their publication. They've just referred to a 5-year adjustment period for goods. In terms of services, you don't have a 4-year period to go back prior to your registration date, but you do have a 6-month period. So ordinarily, if a business registers for VAT and they've incurred VAT on their services before they registered, if they were only making taxable supplies, they'd be able to go back and reclaim that VAT. Because some of those services have been consumed before registration in making your exempt supplies of education, because don't forget your current supplies are exempt, you wouldn't be able to recover the VAT. However, what happens if you receive services of, let's say, leasing your computer equipment, or you've got an annual subscription of some sort, or you've got software licenses? At the moment, Revenue haven't told us whether or not you can recover that VAT. They've said they're going to take a pragmatic approach. The problem we have is that the legislation refers to any recovery being at HMRC's discretion. So in terms of any services that you've incurred that have not been fully consumed, I think it's a question of wait and see. Sorry, next slide, please, Rebecca. So in terms of next slide, there we go. Now, Kam mentioned the capital goods scheme, and this is where you've incurred VAT on, let's say, your building cost. I don't know, let's say you had to refurbish the building and you had to repair the roof and you incurred an amount of VAT on that. What can you do with those costs? Well, what's the capital goods scheme there for? The whole purpose of the capital goods scheme is that it allows you to adjust the VAT you initially incurred on a capital item over a 10-year period. And a capital item is any work on a property, as an example, that's cost you more than £250,000. And that could be a property refurbishment, or it could indeed be the acquisition of a brand new building that was subject to that. And as I say, the adjustment period is 10 years. And that's why everyone's getting excited as to whether or not they can go back and reclaim VAT that they incurred on, let's say, a building project 4 years ago. Can we have the next slide, please? So to give you an example of a very, very high level example of how this might work, let's say your charity constructed a building or incurred VAT on a building project, and there was £1 million VAT incurred back in 2023. At the time, the building was used solely for exempt educational purposes, and so therefore there was no entitlement to VAT recovery. In 2024, up until the end of this year, there's still exempt use, and so there's still no entitlement to VAT recovery. Come the 1st of January, however, when schools have to register and account for VAT on their educational income, and as I say, it's not, and as Kam outlined, not all of your income will be standard rated. There will be an element of exempt income, and that's going to be your closely related services, which are likely to still be exempt. Let's say you do that turnover calculation and it gives you an 85% recovery, i.e. taxable income divided by taxable plus exempt income. What does that mean for capital goods? Well, that £1 million that you initially incurred, you divide it by 10 because that's your 10-year adjustment period, and then you multiply that by the difference between the VAT you initially recovered, which was 0%, and what you're entitled to now, which is 85%. When you do that calculation, that would give you an £85,000 recovery. You have to do these calculations annually, and you do them every single time you've undertaken your partial exemption annual adjustment. So if we move forward into next year, 2026, you do your partial exemption calculation, you now identify that it gives you a 75% recovery. We're using that same formula, that would give you another £75,000. And you'd repeat that process until the 10-year period finishes. And typically your partial exemption recovery rate may fluctuate. However, because you started at a position of nil recovery in year one, you're going to be able to reclaim additional amounts of VAT going forward until the 10 years has expired. And that's the area that everyone has been publicising and saying there could be a windfall for certain schools. The standard method override issue, what is that? And I won't go into the technicalities of it, but ordinarily, if you're using the standard method, there are certain instances where it may be deemed that that's not producing a fair and reasonable result. What's the issue here? The issue here is that, again, from a technical perspective, if you're a school that's received fees in advance, so let's say you've introduced a scheme before the 29th of July and you receive large amounts of exempt income before the 29th of July that weren't liable to VAT, you've now got those school kids sitting in a school that's going to be used for taxable purposes or predominantly taxable purposes come the 1st of January 25. Revenue could argue, well, hold on a moment, if you use a turnover-based method, you're getting an 85% recovery. Whereas if we actually looked at the school children, if 50% of the kids' parents paid in advance and 50% didn't, actually your recovery rate should be based on pupil numbers rather than turnover. Standard method override kicks in, you should be applying a 50% partial exemption rate, not 75%. Again, this is a technical area and one where I don't think there's been any guidance from revenue, but I am aware that some advisors are taking the view it might apply, others think it doesn't. So again, an area of watch this space. Sorry, next slide, please. Technical point, welfare services versus education. This might particularly affect special needs children. At the moment, there is an exemption for the provision of care, treatment or instruction designed to promote the physical or mental welfare of elderly, sick or distressed persons. Similarly, the care or protection of young children. The question that we've been asking revenue is, where is the dividing line between the provision of welfare and the provision of education? A practical perspective, after school clubs and breakfast clubs. Are these actually the provision of care? Because what these clubs are designed to do is to look after children, and therefore the welfare exemption applies. Don't need to worry about the educational exemption. Or alternatively, are revenue going to take the view actually these are social clubs or they're sporting type clubs or there's some other activity going on, it doesn't fall within welfare, it doesn't fall within education, and therefore standard rated?
Yeah,
we have to wait and see.
Just an example on that, for if you have let's say a football club after school, the current thinking is that if a teacher was to hold that and just let the children play and look after them, then that could possibly qualify for exemption. But if you've got a coach in to teach the children and do some drills and then play a match, then that would be considered to be education and that would be subject to VAT. So that's where some of the kind of fine lines or grey areas will kind of continue to be. But at the moment, our understanding is that if you bring a coach in to have an after-school football club, then that would be subject to VAT.
Okay. Next slide, please. And then finally, another battleground here is going to be the definition of what is a closely related service. We certainly need more guidance from revenue. At the moment, we've said that boarding and lodging and the provision of education is standard rated. However, closely related services remain within the exemption. So, prime example, meals charged to pupils. Potentially, because those are closely related services, they remain exempt. However, What we don't know, and what we're waiting to see, is whether revenue would actually argue that's all part of a single supply of education. At the moment, they've seemed to accept that if the school raises a separate invoice for the provision of the meals, that will be exempt. However, whether or not they're going to stick to that, I don't know, because if the meals are a compulsory part of the education, is it right that that's a separate supply? We don't know. We'll have to wait and see. But at the moment, the guidance we've had is as long as the school is raising a separate invoice for the meals, they will remain exempt. I think what revenue are going to be looking for there is whether the schools are going to try and, again, be clever with this and suddenly start charging £19,000 for the provision of meals and only £1,000 for the provision of education. I think if organisations start to do that, revenue will quickly change their position on this. Another area that's been slightly unclear is school trips. Ordinarily, if you buy in accommodation and transport and these are sold to pupils, there is something called the tour operators margin scheme, which again, I won't go into the detail of. Revenue have said that the tour operators margin scheme might apply. I think the correct technical position is that a school trip must be closely related to the provision of education, and therefore school trips, when recharged to children, should continue to be exempt. If you have any problems with revenue once you're registered about that area, I think that's something that we should make representation on. The school trips should remain exempt. And then bursary payments, where a child or the school receives a bursary for the child's education from another organisation, revenue's position at the moment is that that is effectively third-party consideration, and therefore the bursary payment will be subject to that. However, if the school itself is giving a bursary to one of its own pupils, revenue effectively see that as a discount, or they see that as outside the scope of VAT. So on that basis, I think most bursary payments from third parties will be liable to VAT, but there is a small element there that will still continue to be outside the scope. Sorry, next slide, please. I'm conscious of time here. So some useful email addresses there for you. Up until recently, we weren't aware of this, but there is actually an email address where you can send your inquiries on VAT and private school fees direct to revenue. Whether or not they're going to reply, I haven't tested it.
They do respond.
They do respond. Okay, so there it is. We've put it on the slide for you. In terms of looking at some of the more detailed guidance, I've put links, or we've got links there to the revenue website, which are going to be useful to have a look at, which will give you a bit more detail about some of the topics we've discussed today. And the next slide, please. And then for those of you that haven't had enough of me and Kam on this webinar, but want a bit more detail and a bit more interaction, which is certainly what we both prefer, far prefer doing an in-person presentation. We are holding a training event in January, and we've got the date there. At the moment, we're looking at a 2-hour session, but the reason we're holding it in January is hopefully some of the dust will have settled. We'll have a bit more clarity on some of the implications. We'll have a better understanding of the problem areas, and it's an opportunity really to come along and get more practical advice, and you'll have your own experiences of how your VAT registration is progressing. So that's on the 16th of January next year.
Also, just to note that it will be ahead of when your first return is likely to be due for most schools that will be required to register. Okay. So also help with setting up your VAT return process and cost exemption calculations for